Hello students, hope you all are doing good. Today we will start Unit 2, Current Regulatory Framework, Roles of Reserve Bank of India and Regulatory Framework and Setup of Banks. Overview of the session. Regulators, RBI origin, central boards, local boards, roles of RBI, departments of RBI, objective of RBI. Regulators: RBI Financial Market Regulator, SEBI Capital Market Regulator, IRDAI Insurance Sector Regulator, PRFAI Pension Fund Regulator. Reserve Bank of India Origin: the central bank of our country is the Reserve Bank of India. The Reserve Bank of India was set up on the recommendations of the Hilton Young Commission. The commission submitted its report in the year 1926. Though the bank was not set up for another 9 years, it was established in April 1935 with a share capital of rupees 5 crores. The share capital was divided into shares of rupees 100 each fully paid, which was entirely owned by the private shareholders in the beginning. The government held shares of nominal value of rupees 2,20,000. Thus, the Reserve Bank of India was established on April 1, 1935, in accordance with the provisions of Reserve Bank of India Act 1934. The central office of the Reserve Bank was originally established in Calcutta but was permanently moved to Mumbai in the year 1937. The governor of RBI sits in the central office where policies are formulated and finalized. Initially, RBI was privately owned, but since nationalization in 1949, the Reserve Bank is fully owned by the Government of India. Next topic is central boards. The Reserve Bank's affairs are governed by a central board of directors. The board is appointed by the Government of India in keeping with the Reserve Bank of India Act. Official director, full time, governor, and not more than 4 deputy governors. Non official directors are nominated by the government, 10 directors from various fields, and 2 official government. Others, 4 directors, one each from 4 local boards. Functions: General Superintendence and Direction of the bank's affairs. Local boards constituted from Mumbai, Calcutta, New Delhi, Chennai consist 5 members each. Members appointed by the central government. Members shall hold office for a term of 4 years. Functions: to advise the central board on local main matters and to represent territorial and economic interests. If cooperative and indigenous banks, to perform such other local functions as delegated by the central board from time to time. Roles of RBI. So now we will discuss roles of RBI. What are the roles of RBI? Monetary authority, which formulates, implements, and monitors the monetary policy. Objective: maintaining price stability while keeping in mind the objective of growth. Second, regulator and supervisor of the financial system, which prescribes broad parameters of banking operations within which the country's banking and financial system functions. Objective: maintain public confidence in the system, protect depositors' interest, and provide cost effective banking services to the public. Manager of Foreign Exchange. Manage the Foreign Exchange Management Act 1999. Objective is to facilitate external trade and payment promote orderly development and maintenance of foreign exchange market in India. Fourth, issuer of currency. Issue, exchange, and destroy currency notes as well as put into circulation coins minted by the government of India. Objective is to give the public adequate quantity of supplies of currency notes and coins and in good quality. Fifth, developmental role performs a wide range of promotional functions to support national objectives. Sixth, regulator and supervisor of payment and settlement system. RBI introduce and upgrades safe and efficient modes of payment systems in the country to meet the requirement of the public at large. Objective is to maintain public confidence in payment and settlement system. Related functions are bankers to the government and bankers to bank. Bankers to the government performs merchant banking function for the central and the state governments, also act as their bankers. Bankers to bank maintain banking accounts of all scheduled banks. Departments of RBI. The Reserve Bank of India has 16 departments. These are issue departments. This department issues paper currency and therefore it also makes arrangement for the distribution of paper currency. Second, banking department. This department performs two primary functions dealing with government transaction and floating of loans on behalf of the central and state governments. Second is the maintenance of cash reserves of scheduled bank, extending financial assistance to them whenever required. Third is banking development. This department is concerned with the expansion of banking facilities in the rural and semi-urban areas. Fourth, banking operation. This department undertakes periodical inspection of the scheduled banks, analyzes their balance sheets, issues license for opening of new banks, consider request for opening new branches, examine the requests and examine the possibilities for the amalgamation. Fifth is agricultural credit. This department studies the problems connected with agricultural credit, conducts research on rural credit problems, formulates rural credit policy of the Reserve Bank. Sixth, exchange control. This department regulates and controls the sale and purchase of foreign exchange. Seventh, industrial finance. This department extends financial assistance to small scale and medium scale industries. Eighth, non-banking companies. This department based at is chiefly concerned with the supervision of the non-banking companies and financial institutions in the country. Ninth, legal department. This department gives advice to the various departments of the bank on legal matters, prepares directives and official reports of the banks, and gives advice to the bank on the proper implementation of legal matters relating to banking in the country. Research and statistics, that is 10th point. This department undertakes research on problems in the areas of money, credit, finance, production, etc., collects statistics about the various sectors of the company, gives advice to the government for the solution of various economic problems. 11th, Department of Planning and Reorganization. The department formulates new plans and policies. It also reorganizes existing ones in order to make them more effective. 12th, Economic Department. This department formulates banking policies for better implementation of economic policies of the government. 13th, Inspection Department. This department undertakes inspection of various offices of the commercial banks. 14th, Department of Accounts and Expenditure. This department maintains proper records of all receipts and expenditures of the Reserve Bank of India. 15. RBI Service Board. This board deals with the selection of new employees for different posts in the Reserve Bank of India. 16th. Department of Supervision. This department was set up for conducting proper supervision of commercial banks. Objectives of RBI. The main objective of RBI are promotion of monetization and monetary integration of the economy, amendment and modification of currency and regulation of foreign exchange, promotion of specialized financial institutions at national and regional levels to enhance facilities for term finance to industry, provide support to planning authorities and governments to bring economic development with stability and social justice, institutionalization of savings through promotion of banking habit, building up a sound and adequate